All right, guys. So the first stock on my watch list is Match Group. In this time of social distancing, people are craving human interactions in all forms. Match Group's most recent quarter, in which it added 1.3 million new subscribers, up 28% year after year. I believe that this app provides, the long-term needs of higher engagement and more companionship between people. So I believe, in the long term, that this Match Group app is going to be a powerhouse in the online dating industry. As you can see on the chart, it was at its low in the past year at 44.74, and that was in March 23rd. Before that, in what is it? August 7th, it was at its high for the year at $95.32. Currently, it's at 89 or just under $89. I believe in the long term that this stock is going to go up. And let's head on over to the next stock, which is Zynga. So I did my research. Revenue was up 52% year after year. And in late April, kind of seen like a stock surge. In late April, singer Garth Brooks teamed up with Zynga and Amazon to promote a special version of Words with Friends for Prime members. So, Amazon is a complete powerhouse. Anybody that teams up with Amazon, especially if you're in the stock market, your stock is most likely to go up. So let's go next on my watch list, which will be ticker symbol OKTA. So essentially, they are a cloud-based software to manage companies' digital access rights, making work simpler for employees and helping employers keep track of who's who on their network. Okta, they have nearly 8,000 enterprise customers, and about 1,467 of them have annual contracts, which are above $100,000. If you do the math on that, let's see. Let me bring out the calculator. So 1,467 times $100,000 equals that number. I can't really say that number. What is it? $146,700,000 in guaranteed contracts in just a year. That is unbelievable. So that is why OKTA is on my watch list. Also, you can see it's making a complete uptrend from January, February, March. It's been at its lowest at March 16th at $88.66. Currently, it's at 183.92. It made a little bit dip today, so yeah, it would be pretty nice to get in. This stock is definitely going to go up. So let's go to the next stock on my watch list. So I have Now, ServiceNow, ticker symbol NOW. They design, sell, and manage subscription software that helps companies and large enterprise integrate and use all the various software tools across their organizations. More than 900 clients spend more than 100, or excuse me, more than 900 clients spend more than $1 million per year on ServiceNow's platform, up 30% over the past year. So, with everything going on with technology, expect demand for years to come. As you can see, this has been making an overall uptrend since its low for the past year in October 23rd was at its low at $213.99. It's currently at $377.98. Its highest was at just 2 days ago at $396.15. It's making an uptrend, so let's see if it keeps going up. So next stock on my watch list. Oh wait, what happened there? Let me add it back on. So next on my watch list is Appn, which is Appian. They are a low-code software maker where they were expecting 71.35 million in second quarter revenue, but instead they reached 60 to 61 million, which was, kind of seen as a bad thing. I would be mad if I didn't have, like 10 or 11 million more dollars than what I expected. But anyways, I think this stock is still going to go up regardless of its revenue, expected revenue. So pretty much they're investing now, so they're more on the offensive side of things, while the rest of the world is pulling back because of COVID-19 and the uncertainty. Yeah, I expect their shares to go over the long term as a result of today's investments in people and technology. As you can see on the chart, it was at a low of $29.07 in March 20th. It reached its high for the past year at about 2 days ago at 64.72. It's currently at 59.28. It dipped down a little bit, but overall, since about 3 months ago, it's an overall uptrend. So we'll see how this plays out. But like I said earlier, I believe that when you invest in something, it should grow in the long run, just like my stocks. All right, so the next on my stock watch list is TTD, which is the Trade Desk. So the Trade Desk operates a cloud-based technology platform that lets ad buyers optimize their spending, getting the right ads in front of the right shoppers at the right time. According to its first quarter results posted last week, advertising spending on its platform went up by 33%, resulting in net income growing more than 100%, which is, very, very unbelievable. Who can essentially grow their net income by more than 100% in such a short amount of time? Anyways, if you look at the chart, it was at its low at 136 for the past year. That was in March 19th. Today it's at 298.17. It reached its high for the past year at $327.35, and that was about May 7th. So, it is overall it is an uptrend from where it was at its lowest about 2 months ago. Anyways, my next stock on my watch list is ticker symbol TWLO, which is Twilio, however you pronounce it. So essentially, they provide developers with tools to embed communication features within their existing platforms and applications. As more enterprises move towards digital, user-friendly, convenient contact, Twilio will likely be their go-to software provider. They have a market cap of $26 billion. Holy cow. And they do roughly about $1.3 billion in annual sales. I believe the company still has a lot of opportunities for growth ahead. But as we look at the stock chart, it was at its low at $68.06 on March about 16th. It reached its high of $209.94 for the past year at about 2 days ago. Wow. And it's currently at 191.40. Overall, you see a lot of green candlesticks, so it's been going up a lot lately. I expect, with the rise of technology and all that good stuff, this is a go-to software company, so we'll see if this stock does go up, which I do believe it will go up. Anyways, let's go to next on my stock watch list, which is ticker symbol GMED, which is Globus Medical. So essentially, this medical device company, they design and sell products that alleviate spine disorders. As I try to fix my back, sitting straight. So they offer the potential for more accurate screw placements, improved procedure outcomes, less post-surgical pain, faster recovery time, and other benefits like reduced radiation exposure for patients and medical staff. That's really big. I don't know if you guys ever been to like any hospital related stuff where, you know, where you take a test and you're, exposed to radiation. They kind of take that stuff seriously. That's why they make you wear that vest, that heavy vest, you know, just to protect you from radiation. So this is pretty big. This medical company, has a lot of upside. I've been doing my research. A lot of, you know, I guess you can say professional stock pickers are keeping this on their watch list. So I looked into it and I'm like, yeah, definitely. This has a lot of upside to them. As we look at the stock chart for the past year, their low at 33.41 was on January, February, March 16th. Their high was at $60.50 on December 23rd. And currently they're at $55.30. Expect, like all these other stocks on my watch list, expect good things from this stock. I wouldn't necessarily say immediately, but for I'd say all of these stocks are more of a long-term hold. I'm more of a swing trader than a day trader, so just like as Warren Buffett made his riches by holding stuff for the long term, I expect I'm looking to holding most of these stocks for the long term, for those long-term growth and those tax benefits. So anyways, let's go on to my next stock on my watch list, which is, as pretty sure everyone should know, Netflix, ticker symbol NFLX. As you can see, the stock, wow. So it was at its low at 252.28 on August, September, on around mid or late September. Yeah, late September. And it reached its high for the past year at 458.97. That was, wow, about a week ago. It's currently dipping right now. It's at $413.44. And as you know, with everything going on in this world, this streaming pioneer is a favorite in the stock market due to its variety of content. The recent jump in subscribers thanks to people being stuck at home, and its content schedule is still on track into next year. So COVID hasn't really affected Netflix at all. Worldwide they have about 185 million subscribers, but I believe there's still room to grow because Netflix is kind of that company that first started doing it. They're like the original ones, and most people like me, they like the original brand starters or trendsetters, whatever you want to call it. And yeah, let's go to the next stock on my watch list. So next stock is ticker symbol NVDA, Nvidia, however you guys want to say it. Right now it is at $339.48 a stock. It was at its high about a week ago, or less than a week ago, at 367.27 cents. Excuse me. So in the past year, it was at its low at 132.6 cents, and that was on around June of 3rd of 2019. As you can see, in just a year, it nearly tripled in value, which is pretty impressive. Um, so those of you that do not know what they are known for, they are best known for computer graphics processing units. If you're not a nerd, you hear people saying, GPUs in computers and laptops, and this is pretty much what they do. They design and manufacture GPUs. Um, in the last 3 years, revenue grew at an annual rate of 16.5%, and they earn exceptional ratings on Glassdoor, indicating that the workforce is very happy, where they have about 99% of reviewers approve of the CEO and co-founder Jensen Huang, who owns 3.5% of shares, which is a lot. 3.5 of 18 million? That's a lot of shares. This guy's a rich person. Let's. I don't know if I'm doing this correctly. I'm pretty sure I'm doing this correctly. Let's see. So, what is that about? This might not be accurate, but we'll do an estimate. 18 million. Yep, that's 18 million times 0.035 equals. Wow, he owns about 630,000 shares. Roughly about that much. And if we times that by 339.48. Wow, this guy's a lot of dough. Yeah. So we'll go and move on to my next stock on my watch list, which is, I'm sure many of you know, Roku. Ticker symbol ROKU. So this company is a leading platform for video streaming services. Roku is the leading connective TV platform in the US, thanks to its popular devices and partnerships with smart TV makers. According to eMarketer, Roku users make up about 32.9% share of all internet users in the US and 46.9% of CTV users in the country. As you can see in the stock chart, the high for the past year was at 176.55. That was around September 9th. It reached its low for the past year at March 17th at $58.22. It's currently at $109.20. I believe it should go past its high within a few months. You can quote me on that. But yeah, so I have nothing much to say about this stock. It's kind of dipping down right now, but it's on a green candlestick, so we'll see if it does go up. I'll get back to you guys on when I should expect it to reach past its resistance and make a new higher high. So if you want me to do more research and let you guys know when that will happen, please comment below Roku or something. But anyways, my next stock on my watch list, which is, I actually like this one a lot, which is JD. So JD, they sell groceries both online and offline in China, and they are now the leading supermarket business in China. JD have significantly more warehouses than Amazon. Amazon has 175 warehouses, whereas JD, they have 730 warehouses, which is nearly almost 4 times as much or 3 times as much, something like that. JD, they're often compared to Amazon and thought of as the Amazon of China. Not only do they, do like supermarket stuff, they're also China's largest pharmacy, which is impressive. So JD, you look at the stock chart for the past year, it was at 25.48 on around June of 2019. It is currently at 51.02. It reaches high for the past year at, was it May 19th or May 15th at $56.50. If you look at the chart overall, it's basically a uptrend. Yeah, I honestly think that this stock is gonna go, it's just gonna keep going up and up. Especially with China. They have a lot of people, and I'm sure a lot of people need groceries and the pharmacy for especially with these viruses and stuff coming up. People trying to want to be more healthy, so expect JD to go up. So my last stock on my watch list, which is ticker symbol LVGO, which is Livongo Health. They've been public for less than a year. They are a cloud-based provider of chronic disease management tools, and they're already making a splash. Its platforms, which saves health insurance payers money by mitigating the risk of chronic diseases, primarily diabetes, has emerged as a company that's resistant to both the recession and the coronavirus pandemic. Per participant, its clients save $1,908 annually on average, and the stock has more than doubled in the last 3 months. So 3 months ago, it was about 3 months ago it was about $26.07. It's currently at $57.85. It reached a low in the past year of around beginning of October at $15.12. Reached its high for the past year at $63.55 at May 14th. Expect good things from this stock also. So that is a wrap. If you guys want a copy of my watch list, I'll add it down in the description below. If you guys found value in this video, please subscribe, like or comment. If you guys do want to see more videos like this about the stock market and other financial stuff, please subscribe to my channel. I'm looking to connect with more of you guys, because I know that there's a lot of people in YouTube that's into the financial world. I just want to make a network of financial gurus, where we could just teach each other, kind of, like insider trading for YouTubers. That would be the goal, right? So we can all get rich. But anyways, check out, my channel, subscribe, and have a great day, y'all. Peace.